Is it worth buying the stock of Kenya Power, or is Kenya Power stock just another cheap stock at the NSE? Let's talk about that in this video. And I'm saying so because Kenya Power, or KPLC, is up 49% year to date. Since the beginning of this year, it's increased by 49%, right? And over the past 1 year, it's increased by 78%. But interestingly, over the past 5 days, the stock has fallen by 2.9%, and in the last 1 month, it's been up 13%. And today, as we are speaking, the stock of Kenya Power is going at 20 shillings and 30 cents per share. So, after such a massive rally, the big question is, have investors already missed the opportunity, or is KPLC still a cheap stock which might be worth to invest in? And I'm asking so because the company has gone through incredible turnaround. I'm pretty sure if you are in Kenya, you've really been part of Kenya Power's story and even turnaround. From a very long period of time, it was making losses to it making profits, because the most recent of profits, the profit for 2025 was 24.5 billion Kenya shillings. And this was driven by growing electricity sales, reduced system losses, and also it was able to bring back dividends. So let's talk about all that in this video for you to appreciate the stock of Kenya Power. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button to subscribe to my channel, and I'll still add it. Drop a like on this video. And as always, guys, I've attached the link in the comment section to additional resources which you can be able to go and read for you to understand stock investing and how to make money in the stock market. Having said that, let's jump right in it, starting with the company snapshot. So, Kenya Power has been in existence for a while. And I'm saying so because it was established in 1922. It began as East Africa Power Distributor, and then sometime in 1980s, it became Kenya Power and Lighting Company, and then 2011, it rebranded to Kenya Power. And Kenya Power is essentially the company that connects electricity generation to the final consumer. In Kenya, of course, there's different people who generate electricity. Kenyan, case in point, Kenyan. And then now that electricity is sold to Kenya Power, and Kenya Power distributes and sells the electricity to consumers. And this is very massive business, because each and every household in Kenya, each and every day, needs energy for the household to light, right? Needs energy for the household maybe to do things like cooking. And even beyond that, industrial customers need energy for them to be in business. And that is why Kenya Power has a very huge market share. We are talking about Kenya Power serving upwards of 10 million customers in Kenya. And the beautiful thing is that most of these customers who are bringing Kenya Power revenue, more than 50% of the revenue is coming from industrial customers. Meaning, Kenya Power is heavily contributing towards Kenya's industrialization story and actually supporting businesses to be able to grow the economy of the country. So in case you decide to buy Kenya Power's shares or stocks, what investment thesis are you jumping on? Simply put, what are the reasons as to why you could jump on this particular stock? At number one, we have the turnaround story. We all know Kenya Power was making losses for a long period of time. So seeing it generate profit upwards of 24 billion Kenya shillings in the past financial year is something very commendable. Then secondly, electricity demand is growing. And I'm saying so because in the 6 months to December 2025, electricity sales revenue increased by 6.9%, while electricity units sold increased by 10% to 6,086 gigawatt hours. That tells you the demand for electricity in the country is growing. And then the third reason is efficiency is improving. And I'm saying so because according to Kenya Power's data, distribution efficiency improved significantly as Kenya Power continued investing in the network and reducing system losses. Because as you're going to see in data, system losses of Kenya Power reduced commendably in the previous year. And then the fourth reason as to why you could consider buying Kenya Power stock is because dividends are back. And I'm saying so because in the financial year 2025, shareholders received a total dividend of 1 shilling per share. Of course, a combination of interim dividend of 20 cents and then final dividends of 80 cents. And then the fifth enticing thing about Kenya Power's investing thesis is that the balance sheet is improving. And I'm saying so because key aspects of the balance sheet are on the rise, and also worth noting is that total borrowings did fall because they reduced from 98.5 billion Kenya shillings to 87.6 billion Kenya shillings during the financial year of 2025. That tells us Kenya Power looks like a robust business because of increasing demand, improved efficiencies, stronger profitability, low debt, and it is returning to dividend. That is a good package for an investor out there to consider. Beyond this, let's look at the financial performance for us to really appreciate how Kenya Power is faring on when it comes to different numbers. Starting with revenue, KPLC generated a revenue of 219.3 billion Kenya shillings in the financial year 2025. Of course, this was a slight drop compared to its revenue of 231.1 billion in the year 2024. It is important for you to know that yes, the revenue did drop, yes, but still the revenue was there. And this is the amazing thing, and it is important to appreciate because please note, just a few years prior to that, the company was making losses. And then the second aspect around financials is that Kenya Power did generate a profit of 35.4 billion before tax, right? And 24.47 billion in profit after tax in the financial year of 2025. That's quite low compared to 30.08 billion profit recorded in the financial year 2024. But there's an important reason for this, okay? And I'm saying so because financial year 2024 benefited from significant foreign exchange related gains. So comparing the 2 years without considering what could have gone wrong isn't the accurate picture because the foreign exchange was quite dire or tough on Kenya Power in the financial year 2025. And then beyond that, when you look at other aspects around performance, more so beyond 2025, how Kenya Power performed the first half of 2026 is that for the 6 months leading to December of 2025, Kenya Power generated 14.83 billion in profit before tax, and that is up by 5.5% year on year, which tells us the company is continuing to do well, and even it seems like it's going to continue increasing its profitability. Now, let's look at an interesting aspect when it comes to power distribution, something called system losses. And this is where Kenya Power also did shine in the previous financial year. And I'm saying so because there is one number which you need to watch out for as an investor out there, which, as I've said, is called system losses. In simple terms, Kenya Power does buy electricity, right? Distributes through its network, and some of that electricity is lost before it reaches consumers, which of course is something costly to the utility because remember, it's bought electricity from Kenyan or even other independent power producers. So in case it loses a huge chunk of this electricity, that is considered system loss. Kenya Power was more efficient in the past financial year because it was able to reduce its electricity loss through its system and therefore increase electricity distribution efficiency from 76.35% to 77.97%. This is one of the operational improvements that could have a meaningful impact on KPLC's profitability over time because it is becoming more efficient when it comes to reducing system losses. Then, let's look at dividend analysis. How did Kenya Power fare on when it comes to dividends? Okay? When you look at dividends, last year, Kenya Power was able to pay a total of 1 shilling per share on dividends, right? And that placed Kenya Power's dividend yield at approximately 4.9%. And then there is another positive development when it comes to dividends, right? For the 6 months ending December 2025, simply put, the numbers which you're going to see as part of the numbers of this year, 2026, KPLC declared an interim dividend of 30 cents per share, which of course was a slight bump up from last year, signaling the business is in good financial health. Okay? And then let's look at valuation for us to really appreciate if Kenya Power stock is undervalued or even so overvalued. And we're going to look at different ratios, starting with the price to earnings ratio or PE ratio. The PE ratio tells us that Kenya Power's PE ratio stands at 1.62 times. Of course, that is extremely low, right? Because remember, in ideal listing, typically PE ratios need to be upwards of 10 times. And then when you look at the PB or price to book ratio, PB ratio stands at 0.91 times, which also is quite low because it simply means the market is currently valuing KPLC at slightly less than the accounting value of its net assets. Okay? And then when you look at dividend yield, please remember our indicated dividend yield is 4.9%. Okay? And then another ratio which is worth looking at more so for capital intensive businesses is the enterprise value against the EBITDA. So looking at the EV against EBITDA ratio, it stands at approximately 3.14 times. Guys, that also indicates that this ratio indicates a low valuation for a company generating these levels of operating earnings. Based on valuation, the final verdict, and actually this is interesting because it matches across the different ratios, is that KPLC stock looks cheap because PE ratio is 1.62 times, PB 0.91 times, dividend yield 4.9%, and of course the EV to EBITDA is 3.1 times. So the interesting question is therefore, why is the market willing to value KPLC that cheaply? This is because of existing risks. Let's now look at the risks, and the biggest risk is the risk to Kenya Power's monopoly. I'm saying so because, in case you don't know, sometimes in May this year, there was a revision in the country's Energy Act. Simply put, Kenya Power's monopoly position is currently being challenged and is bound to change because the law allowed for those large customers to actually be able to source for electricity directly from an electricity producer out there, and then they're most likely going to utilize Kenya Power distribution network to distribute electricity directly to the consumer. For those large consumers, we might see a shift because Kenya Power might not continue controlling the customer relationship. And that has been opened up in the energy laws revision in the country. So we're bound to see that really affect Kenya Power stock and business in the coming months and even years. That's the biggest risk to Kenya Power's monopoly. And then other risks also worth considering are, for example, the debt. Kenya Power, of course, is in debt, right? Yes, it significantly reduced its debt, but then still, we are talking about it having a debt of 87.6 billion Kenya shillings. And then the other risk is foreign exchange. Remember, a significant portion of Kenya Power's borrowings are in foreign currency denomination, meaning exchange rate movements can affect the company's financial position, because if you are paying debt in foreign currency, then it means any fluctuations will end up affecting your financial performance. And then the other risk is system losses. Yes, Kenya Power has improved system losses, right, by reducing the losses. But then again, there's still room for further improvement. This is something worth noting. And then the other risk is grid reliability. In case you are in Kenya, I don't need to talk a lot about this, right? Because grid reliability in Kenya Power has been quite a challenge, right? Talk about increasing complexity when it comes to Kenya Power being able to manage its grid, right? As a country, Kenya is adding more and more to its energy sources. People out there are also jumping on solar power. Of course, Kenya Power has also had issues with its reliability of electricity, and therefore that's a possible risk in addition to the risks I've mentioned. And beyond risks, what are the growth catalysts or enablers which can make Kenya Power stock to continue doing well? Among the growth catalysts are, at number one, growing electricity demand. Because as a country, we are looking to grow the economy, and so is the demand for energy. At number two, Kenya Power is serving more and more customers. I've given an example. Last year, Kenya Power was able to serve upwards of 10 million customers in Kenya, which is a good number. Number 3 catalyst is its indication of lower system losses, which is a good indication, right? And then number 4, there's efforts around grid modernization through grid upgrades and digitization aimed to improve the grid infrastructure. And then number 5 is that there is also improved efforts around industrialization, because as a country, we are looking to industrialize and, of course, enable Kenya to become a more improved economy. Therefore, Kenya Power, being a key player in the energy sector, is going to be at the center of that, and that's a very clear growth catalyst. Okay? Having spoken about all these, would I buy Kenya Power stock or not? So, as I've said, Kenya Power stock is going at 20 shillings and 30 cents per share, right? And then when you look at key matrices, for example, valuation, it indicates there is low valuation on Kenya Power stock across the different valuation matrices, which is a good indicator in case that's an entry point to consider. And then beyond that, earnings remain strong, right? Electricity demand continues growing and system efficiencies are improving. Based on all these, and also just understanding the risk which Kenya Power is positioned in, and also its strengths, I'd still buy Kenya Power stock. The only thing is that I won't buy it in huge volumes at once. Rather, I'm going to continue stacking the stock slow but sure, as I continue monitoring in case the risks are also increasing or not. So my final verdict is that Kenya Power is a good buy, but then again, a person needs to buy in small portions and continue accumulating over time, instead of just waking up and dumping huge amount of money on Kenya Power stock. In case you are out there, what will you rather do? Based on the fundamental which I've shared with you, and you haven't looked at the numbers, would you buy Kenya Power stock, or the Kenya Power stock is not an enticing stock for you? I hope you've gotten a thing or two from this video. Looking forward to share with you other amazing videos next time. Cheers guys, and you all stay safe.